Okay, good morning and welcome to the first virtual Friday. So glad that you joined us today. My name is Susan Neal Doughty. I'm with the Chamber. Glad to have my crew here to help us with our Zoom Friday coffee. First of all, I want to thank you for being here. I know in these times it's a little bit challenging, but we're still getting things done. Big thank you to our frontline workers. Those of us that are still working maybe even harder now than they did before, keep us safe, maybe healthcare workers or in the financial industry, we appreciate you. And those of us that are staying home, we're staying safe too, doing our part, make it count. I hope that you're doing what I do and enjoying some family time, still working a little bit and some do-it-yourself projects. I'm going to turn it over to Kelsey now because she's going to share the Zoom format to make sure that if you have any technical problems, she can take care of that for you. So Kelsey?
Okay, hope everybody can hear me okay. Thanks so much for coming. This is kind of a new thing for us too. This is our first official Zoom meeting with this many people. And I think we're up to like 61 or more people, so this is really great. We're very excited. I was just going to give you guys a couple of housekeeping things. As you'll notice, everyone is muted right now. That's just to kind of eliminate any background noise. And if you're a speaker, we'll unmute you if you're having trouble with that whenever it's time to speak. We want everybody to know who's here. So if you haven't named yourself yet, or if it's just showing your phone number, you're going to want to try and rename yourself by clicking on your photo and hitting that rename button. Something else that we can do is if you have any questions, we want you to put those in the chat window. So there's a button that says chat and you can type in anything you need there. I'm going to go ahead and stop sharing my screen so we can all see each other again. And what we're going to do is we're going to take a picture. So if you guys have a coffee cup or a water bottle, or if you have a beverage of any sort, hold it up. And if you don't have anything, you can just do a thumbs up. So let me make sure my screen's as large as possible here before I do that. Okay, everybody ready? I'm going to take, see, I got my phone right here. I'm going to take the picture. Ready? 1, 2, 3. All right, and if you weren't ready, you get a second chance. 1, 2, 3. Awesome. Thank you, guys. All right, and if you guys are having troubleshooting issues, you can still use that chat window and you can send me any questions and I'll be happy to help you guys get figured out. So I'm going to turn this back over to Susan and let her move us forward.
Yes, thanks, Kelsey. We appreciate that. And welcome. As I said, I'm Susan Neal Doughty. I see we've had a few more people joining us as we started our meeting. I want to recognize our sponsor, Natalie Newville. I know that she's joined us. So Natalie, why don't you share us a little bit about the Missouri River Regional Library and the business resources that you have available? Is Natalie unmuted?
Thank you. Kelsey, you have to unmute me. It's got the special controls. Kelsey has all the power right now, you guys. Thank you guys for coming. We really appreciate it. Obviously right now, the library and the resources that we have are super valuable. One, because they don't cost you or your business anything. And two, because while you're stuck at home, there's a lot of great trainings and resources that are available, not only for you, but also for any of your employees. Who may be, working from home and you're trying to take advantage of this time so that they can learn some valuable skills and really brush up on some things. So there's a lot of different resources on our website. If your staff do not have library cards, they can apply online for them, and we are emailing out their card number so that they get it pretty quickly right now. And the different topics, there's a whole variety of things. There's customer service training. There's different tech trainings, like if you want them to learn how to make videos for social media or create images. There's really just a whole host of things. There's also some language learning databases, and they have specific, not that healthcare workers have extra time right now, but that's the example I always use. Where like they can learn Spanish for just in the healthcare field. So like if they have someone who comes to the desk and needs to know some things, they can learn some basic communication. So there's a lot of different options. And right now, especially, it's a great time to take advantage of those options and really utilize that resource that we have right here in the community. So it's all on our website, which is mrrl.org. We do have a blog post on the front page that kind of lays out a lot of it, but you can also hit the Explore tab and just kind of check out everything. But there's hundreds and hundreds. If you have kids who are attempting to like do school right now, excuse me, there's also a lot of great resources on there for those kids, math, science, all kinds of different stuff. So if you have questions, feel free to email me and I will put you in the right direction.
Thanks, Natalie. We appreciate that. I'm glad that you're with us on our pioneer sponsor for our virtual Friday coffee. I don't know if Kelsey's unmuted me. She has. Good. Thanks. Hey, like that. And this time I'm going to turn it over to Sean Sappenfield. He is our existing business manager, and he's been busy working hard trying to check in on all of our member businesses and give them proper assistance. And he was helpful in getting our program together today. So Sean, I'll let you take it from here.
Okay, thank you, Susan. Natalie, thank you very much for being the host this morning and all the services that the library provides for our community and outlying areas. So thank you again, Natalie. What we would like to do this morning is have a little panel discussion. And what I would like you to do is the chat room, just send me any questions that you may have, and I will provide these to our two presenters, our two panelists. And our two panelists are, we have Leslie Tanner, Vice President of Commercial Lending at Central Bank, and we also have Jason Schwartz, Senior VP of Commercial Lending at Hawthorn Bank. So thank you to both of them for being with us this morning, providing their time and their expertise. I know they've been both working very hard over the weekend with this new stimulus package that's slowly moving its way out into the economy, if you will. And as we know, we're in a very particular time here. And with this new stimulus package, I'm sure you've been following it, or hopefully you have. It is broke down into various parts. Parts meaning there's over $2 trillion that's going to be injected into the economy. A slight breakdown, if you will, individuals be going to individuals through unemployment, student loan assistance, large corporations through loans, wage benefits, and lots of other programs. Small business, obviously, which we will be homing in on today. Over $3 billion in new loans, $17 billion in relief for existing loans, and about $10 billion in grants in there as well. So, and then state and public services, there'll be a myriad of programs and services being provided, basically monies provided to these entities as well. But what we would like to focus on this morning is, and if you do have other questions, please provide it to us, but the payroll protection plan. This was part of the stimulus package, and this is the program that I know a lot of people have been interested in and homing in on, and maybe already made an application to their local lender. So what I would like to do is turn it over to Jason and Leslie. And maybe Leslie first, would you like to provide a just a little intro in what you're seeing from your end? And then Jason, we had asked you to do the same thing.
Right. What we're seeing from our end is there's a lot of different programs out there right now. So first, we try to educate the customer on the PPP program and the disaster loan, with the economic injury disaster loan. They're two different programs. So today, I think this seminar is about the PPP, which is the payroll protection plan. The whole gist of it is they want the money out to the borrowers so that they can pay their employees. It's a little tricky sometimes when they're on a shutdown like we are and they're not actually open to full capacity, but we can talk about that later. Our volume has been really big. We had lots of apps before we got started. We started about 3 o'clock a.m. last Friday. Been going strong since then, and we have 400 applications already approved. These are big dollars and they're very small dollars too. So Jason, what are you seeing?
Thanks, Leslie. Very similar, and I will preface this to everybody that when it comes to small business lending and expertise, Leslie Tanner certainly comes with a great reputation. I'm instead known as the tallest banker in town. But what we've seen is the same kind of flow. While Leslie's, central bank as a holding company has multiple facilities and segment their banks, we have one charter. So our Kansas City and Springfield relationships are in our numbers as well. We're at 575 applications that have been submitted to the SBA. We got a handful that are still yet to be submitted. What we see in this program is daily change. And so when your lender's telling you, hey, here's how this is going to work, and then they call you or email you, if they're like me, because they're on the phone the whole time, and say, hey, this has changed or that's changed, or we're waiting for clarity, they're sincere. The program is a massive rollout, $349 billion, asking your banking system to carry that forward for the Treasury Department. And I will say this, your community banks have stepped up and are providing service to their customers. They're getting money out, they're getting answers out, and we're all in it together. We've seen great camaraderie in the industry with the Missouri Bankers Association and the ABA, the American Bankers Association, and even discussions, small work group discussions between the banks. So we're here to serve our Jeff City Chamber Commerce members and the community.
Thank you, Jason, and thank you, Leslie. I haven't received any questions yet. I don't know if that's good or bad, but let me pose this question to both of you. I'm a small business owner. I'm reading through all this information that's coming across my screen. So I want to take advantage of the payroll protection program. What should I do? What's the first thing that I should do?
So this is a little bit different. It's not based on cash flow or anything like that. It is based on a formula they came up with. And when I say they, the SBA and Treasury. What it is, you take a look back during normal times. So during 2019, you will go back to your payroll, and there's a formula of what things you can include and not include. But basically, you're figuring out your annual payroll that you had, and then you take that down to a monthly. So you have average monthly. You take that average monthly payroll times 2.5%, and that tells you what your loan amount can be. So once you fund your loan, you have 8 weeks to spend that. And that's why there's a problem where some people, they probably should wait to apply until they're up and going, or they're paying their employees while they're not open. So you kind of wonder on that 2.5, well, that's, if it was just 8 weeks of payroll, it would be times 0.2. So the extra that they give you, there's 4 things you can use your loan amount for. You can use it for payroll, In fact, 75% of your loan amount has to be used for payroll. You can also use it for utilities, and you can use it for rent, and you could use, if you have a mortgage on your, like a building mortgage on your business, then you can use the interest on that loan payment. Again, it's whatever you spend in that 8 weeks. So it's all that, the interest you incur, the rent you incur, utilities, and the payroll in that 8-week time. Part of the information, we were quite surprised. If you've seen the application, it's pretty short, yes, no answers and things like that. When we got in that Friday morning, started entering data into the system they brought back from the early 90s, they wanted to know how that loan amount was going to be allocated between those 4 items and a lot more information. So we have created a supplemental. If you are interested in applying and haven't yet, you'll have your application, but we also have a supplemental form that asks some more detailed stuff. If we have that information, we get you approved. And as far as proving, the other question I've received a lot is, I sent in my application, you guys have it, you know, you say it's okay, but when am I actually approved? So as Jason's staff or my staff has been doing is the applications come in, we make sure things look okay. You have to have supporting documentation of how you came up with your total payroll costs. And a lot of accountants provide just 2019 summaries for that information, which is wonderful. And so basically we get all the information through the system. At the very last thing, we hit submit, and then we get our approval sheet. So you're approved on site because we've been doing these loans for a long time. So you're approved actually whenever the lender puts you through their system. And so we've been kind of so busy, we haven't gotten back to everyone saying, oh, you went through our system, you're approved. So most people, whenever you do submit your application, 99% of the time you're approved, and your lender may call you for questions.
Anything to add?
I really think Leslie gave a very good detailed explanation of how that part of the process is happening.
Okay. So I'm receiving some questions. So here we go with the first one. So with the payroll protection applications for self-employed individuals, are the banks ready to process today, and is additional guidance needed? We may have answered that a little bit, but Jason, you want to go with that? You want me to repeat the question?
Nope, I think I got it. It is today the $64,000 question. What was allowed is on April 3rd, small businesses could apply and sole proprietorships, and then starting today, the 10th, independent contractors and self-employed individuals can apply. What the SBA has failed to give the banks as a tool is good guidance on how to calculate what's considered payroll for self-employed and independent contractors. So what I'm going to talk about is, let's say, the current belief in how that will be calculated, even though we don't have a good guidance on it. But to help small businesses or individuals figure out what they think they're going to be able to apply for and what documentation to get ready for, I believe what we're going to look to is your bottom line of your Schedule C as your net income being what your pay is. Owners are eligible to have their payroll considered on small businesses, and the belief is that in the industry that self-employed and independent contractors will have that same consideration. So you will take what your net income is off your Schedule C. Bear with me a second, because I know a lot of you don't have 2019 tax returns done yet. You will have to cap that at $100,000. The things that you may be able to add to it will be if you make a contribution to a SEP or a simple plan, so your retirement, and then your health care insurance. You would then take those items, divide them by 12, multiply them by the 2.5, and that would give you potentially a loan amount. here are the current reservations I would have in processing an application for an independent contractor or self-employed individual, and why I would caution them as well. We haven't gotten specific guidance on the forgiveness aspects of those items. We have not gotten guidance that that is actually how those will be calculated. I continue to read that in the industry, but there is no specific guidance from Treasury or SBA to make that calculation. But that's how I would be moving forward, is looking to collect your 1099s if you don't have your 2019 tax return done, and use those 1099s as proof of your pay. And then go ahead and get your application ready. You can go to www.treasury.gov/cares, and that will take you to all the documentation that Treasury has dispensed so far. One of those is an application. I would get your app ready. You won't know the loan amount yet, but you'll have everything else checked, so you make sure that you're eligible. And then when you have a good guidance on a calculation, you can pull the trigger to move it forward.
Okay, thank you. Thank you, Jason. Leslie, anything to add? Or
We've had some Schedule C applicants, and the only thing we're adding, it doesn't happen very often, is if they maybe have a part-time worker with them. So they can also add in any wages that they've paid to others, as long as it's under 100 or capped at 100,000, which of course it would be. And those are wages they've paid, like if they've issued a W-2 to someone. If they issue a 1099 to someone, you do not count that as payroll that you've incurred.
and Leslie, I'll just, since you're right there. So the payroll protection is the payroll protection program only for payroll issues, which I think you've already answered this, but what is it for self-employed with no other employees who still have to pay building rental and or mortgages and utilities? So basically,
right. So what Jason explained, the calculation, he explained very well about how you determine your loan amount. That's determining your loan amount. The way you can use it is still those 4 original items that I listed earlier, which is the mortgage, interest, rent, and utilities and payroll. But always remember that payroll has to be at least 75% of your loan amount.
Jason, anything to?
There has been a little bit of guidance given, and that is for self-employed and independent contractors. If one of your items that you're hoping to claim is rent as a forgivable expense, it must have appeared on your 2018 or 19 tax return to be considered. You can't just have rent starting this year.
Right, and another thing too, we're using the 2018 tax returns if they do not have the 19 tax returns completed.
Okay.
Yep.
Okay, we are going to move on. And okay, so we have a timing question. When does the 8-week timeline begin? And can you backdate it to a certain date?
So that's been a huge moving target ever since some of the regulation rules started being interpreted. So we have interpretations along the way. And then like Treasury right now is giving us some firm answers to some of our questions. So like Jason said before, this is a totally moving target from day to day. As far as timelines, we found out yesterday, we have 10 calendar days to close on loans that have been approved. So last Friday, we approved 186 loans. Those have to be out and funded and signed and returned by Monday. So that's all we're going to do over the weekend and the rest of today. So we bring in help like Angela. But that is the new timeline. You get approved within 10 calendar days. You should have your documents in front of you signing them. You are supposed to disperse whenever you turn in your docs back, turn in your documents back. And to me, I know that's the rule, but I know that some people do not need this money now. They may need it in a couple weeks when they can open their actual doors again. So we're going to work around that. So Jason, what are you guys doing with this timeline?
Well, we're doing our best to meet the timeline, and we're going to continue to close them as quickly as we can to be in compliance. I know there are people that are now going, well, I wanted to be first in line, but now I don't want to be first in line. Well,
Right.
You got in line. The whole project here is the government trying to stimulate the economy by getting funds back into it. So you're logged in. We're going to get your funds to you, and you need to put them to work and get them out to your employees.
Very good. Very good. Okay, moving on. How do I choose between the two programs, meaning the Payroll Protection Program and the EIDL, as they're calling it, the Economic Injury Disaster Loan? Jason, we'll just go back to you.
Sure. Well, the easy part of this answer for me is if you want a Paycheck Protection Program loan, you come to the banks. And if you want an EIDL loan, you have to go online and apply directly to the SBA. The advantage of the Paycheck Protection Program is you got forgivable capacity within there as long as you're spending on payroll, where on the EIDL, there is the opportunity to do their advance, which is a $10,000 grant, and then move forward into an actual loan, terms up to 30 years at 375 fixed for that time period, and amounts up to $2 million. If you're an operating entity with staff, the PPP program is built for you. It's to help you carry that. If you're up and operating and you're going, hey, we're doing okay, well, that's all right. That's what we're supposed to be doing. And you should utilize this because there's still hard days to come. If you're closed down right now because you can't have enough income to pay your staff, well, you should get this and put your staff back to work where you can. For the EIDL, I think what you're looking there is more of a long-term, termed out. We have suffered economic injury, and it is going to take us a significantly long time to recover.
Okay, Leslie?
So I agree with that. The government really wants you to choose one or the other. So right now, we are getting applicants, and then it pops up in E-Tran, hey, this applicant has already applied for the EIDL. So what happens is we have to pull up from the disaster loan what portion of that was for payroll. Some people are not they haven't been approved long enough to even know what portion that is we're supposed to bring up to the PPP. So there's going to be confusion for people who have already opened up both applications. That's something we're going to need to handle in the next 24 hours. The government really, if you do get a PPP now and you want to do the disaster loan later, you cannot include anything for purposes for payroll if you do it later. You can have other purposes going on, but you're not going to be able to repeat payroll purposes within both programs. I hope that makes sense.
Okay, very good. Okay, moving right along. Leslie, why don't you stay right there with us? Are associations, such as a 501c6 entities, able to take advantage of the payroll protection?
That's a great question. The 501c3s are eligible. The 501c6s are not eligible for PPP. However, we did have a situation that kind of like the holding company, like the higher level was a 501c3 or a C6, but then they had subsidiaries with their own tax ID numbers, and they had a subsidiary, I think it was an insurance spinoff, that actually was a 501c3. So that subsidiary, it had its own tax ID number, and it was a 501c3. So that subsidiary was able to apply, and they were approved.
Jason, anything?
And
Yeah,
on the disaster program, they have just came out and said not-for-profits are eligible. They have not made any distinctions.
Okay. Thank you, Leslie. Okay, Jason, another timing question. I need my PPP, Payroll Protection Program, to close in June, but I was approved on Friday. Is there any way I can defer the start date of distribution?
So Treasury is very clear. We have 10 calendar days to get those funds out. There will be some people that want to go to their bank and withdraw their application and then resubmit later on. The risk you're taking is, will the funds be available? There is some belief, and I'm not certain, and Leslie may speak to this, that if you withdraw your loan at your current lender, that you will have to go to a different lender to get the loan. So it's kind of the trap of, if you were first in line, you're going to be first to get the money. Leslie, if you got better information than that, please share.
I have two thoughts. One of them, we may have a statement from the borrower in the file saying, I refuse this money because I don't need it now. I want it more like June 30 when the program ends. The only thing we had received before that was that we had through June 30 to disperse. And so this changes a lot of things for people. And this just changed like in the last 48 hours for all of us. Again, moving target. So yes, they can withdraw. And I did notice on E-Train, which is the system we're using, you can cancel a loan, and then that data is still in there, and there is a button to reinstate. So we're going to play around with that button and see what happens. If people try accidentally, they've gone to several lenders and they've made PPP applications at both places. The system knows if you've been approved for one, it will not let you do another one.
Very good. Okay, here. Bear with me here just a second. My computer locked up. Can you still hear me?
We hear you.
There's a question I see that it says, if you don't use 75% for payroll, will you still get forgiveness for the portion you do use? You can use it as payroll in those other three items that I listed before. So as long as you use it for those 4 items, you're 100% forgiven. If you are not forgiven, at forgiven time, you will be talking to your lender about how you're going to make payments on that. You will receive 6 months of the interest. And this loan, whenever you're using this loan, your first 6 months is deferred interest. The interest rate is 1%. So that is deferred. So basically, if you, in your 8 weeks, if you use it how you should, you will not have to pay any interest. So the curtailment that you have that you're not forgiven for, that will be a loan with the bank. The whole loan cannot be more than 2 years. So we're 6 months into it. So if you have a curtailment, you have 18 months to get that absolutely paid off in full. And the bank will probably, we have no guidance on what we have to do yet, but it's coming. We imagine amortizing that out in 12 months then.
Okay. Jason, anything to add?
Again, we're waiting for specific guidance, but I think the ideology is, if you don't get it all forgiven, you will be able to get a pro rata share of it forgiven based on your utilization of qualified expenses.
Okay, very good. Okay, so I can see my computer is still locked, but I can see the next question. so if a company has not paid its owner, so you're talking about I take it a single employee owner has not paid the owner payroll or any type of equity, then should you go with the emergency or the economic injury disaster loan?
That's a good point. The economic disaster loan, it's based on your gross profit. So the formula they're using over there is your gross profit, which is your revenues minus cost of goods sold is the gross profit. You are eligible for 50% of your gross profit. That's how they're calculating what your loan amount will be. So that may help some people decide which program to go to.
Okay. All right, Jason. Does the payroll begin considering count for actual hours worked during the 8-week session or period, during the 8-week period, or is the payroll paid out so it actually looking forward 2 weeks if the payroll is due on Monday? Basically, the question sounds like they're just trying to figure out the time of the week and when to begin.
Sure.
Recording
and I saw another question earlier, so I'll help get back to that as well. So when you get your phones is when your 8-week, when you get your funds, they go in your account, that's when your 8 weeks starts. So boom, I put that money in there yesterday, let's say, and you're a payroll on Friday. My understanding at this point, again, there's still guidance to come on the forgiveness part, is you write those paychecks the next day, they're going to clear that account. Those are going to count as payroll during that time. With that said, you need to be thoughtful about at the end of that program, if your 8 weeks are going to end and the next week you're going to have payroll, you might want to move your payroll up a week to make sure that you hit it within those time periods. I absolutely expect in the next 30 days for there to be better guidance on the forgiveness part, but at this point their concentration is on the dispersal part. So that's where most of the focus and guidance has come. But you should be able to spend your money from the day you get it and count your 8 weeks going forward.
So just the concept of everything is, what was it like a year ago? That's why we were looking at 2019 payroll expenses. And we want to compare, what was it like a year ago? Did we get to that same area? Did you have the same FTE or heads of employees at forgiveness time? Did you have like the average monthly payroll? Was that about the same? So that's what the forgiveness is that's the whole goal of it. And when we get down to the numbers, we don't have guidance yet, but as long as you have about the same number of employees at the rate of wages they were paying or receiving before, that's going to get you right in that basket of forgiveness. Do you agree with that, Jason?
I do.
There was one question here about the interest, the loan interest rate. They thought it was 0.5. It was 0.5%, and banks kind of talked to Treasury, so they moved it to 1%. So.
Hey, in our defense on that, it was originally up to 4%, and then they dropped it to 0.5%, and then they settled on 1%. And that all changed in about 36 hours. So it is, it's part of the game.
But just remember, if you go through the program and you're 100% forgiven, you don't have to pay any interest at all.
Very good.
Correct.
Thank you. Kelsey, you still with us?
Yeah.
Okay, Kelsey, here's my situation. My computer has locked. So basically the last question that I can see was at 9:30 a.m. Can you take it from there with the questions until mine? So it's 9:30. What are your thoughts on using 2008 tax return?
Okay. So do we want to start out with that one?
Yeah, just start with that one because our panelists, they can both see the questions as well.
Okay. Okay, who wants to answer that one? Leslie or Jason?
I think Leslie mentioned that before, but yeah, if we don't have 19, 18 will be for self-employed is probably what we're going to have to operate off of. But you're also going to want to see those 2019 1099s to show that you did have at least see what kind of revenue you had, and then we can do a comparative expense to make sure it's still defendable.
So I'm seeing some questions on unemployment. If your employees are on unemployment, unemployment is paying high rates right now. We do think that some owners need to start talking if they're going to use the PPP program and they have 8 weeks to ramp up their wages and salaries to get them going again. Some of their employees may not come back because unemployment might be a better situation for them. So we're kind of wondering to see what's going to happen with that, if people will go back or if they will just want to stay unemployed.
Okay, and it looks like the next question we've got, it says, if your business is closed to COVID-19, your employees are getting unemployment, then the PPP would not be helpful, correct?
That's a discussion they have to have. I mean, you have 8 weeks to spend this payroll, and if you don't have the employees coming back for that, you might be in a little bit of a pickle. And which also brings up another thing. You're approved for a certain amount, and let's just say it's 100,000, and you had expected to pay 75,000 on payroll. If that isn't hit, you just whatever you don't use of the 100,000, you can pay back. So that's the key. Everything's forgiven as long as you only spend the money that you've incurred for those 4 parts. Now, if the 100,000 goes into your general account, you start spending everything like you normally do, and then you're like, oh my God, we only spent 75. That's eligible for 75% of this loan. That's eligible for forgiveness. So I think all banks are doing this. We have a PPP checking account, which you should put your money in and then do all your expensing out of that. So that kind of documents how you spent your 100,000. So if you only spent 75,000, you would have the 25 left in that account to pay down the loan, and then you're forgiven and you're done with everything.
Okay, and I guess that kind of rolls into the next question about if you don't use 75% for payroll, will you still get forgiveness for the portion that you do use?
And that's why, and I tried to speak that earlier. Yes, I expect you to get a prorated forgiveness. So if, let's say you had 50% of your funds were spent on payroll, well, you'll be able to get forgiven on that 50%. 75% of what you get forgiven will have to be payroll, but it doesn't have to be 75% of the loan amount. But it means that if in that case, then the whole loan amount wouldn't be forgiven. Which comes back to what Leslie just said. Hold on to these funds where you should, if your intent is to get them forgiven. And if you don't spend them all, there's no prepayment penalty. Pay them back down when that forgiveness comes in, and you should satisfy your loan either completely or everything but the 1% interest on the part that wasn't forgiven, which should be a very de minimis amount.
Okay, anything to add to that, Leslie, or?
Nope, I think we covered it.
Okay, so the next question says, how do you handle a situation where someone left the company and filed for unemployment in early March? Can we still apply for the loan? And how would this work with their unemployment checks? And do we go back and make compensation whole as if they never left?
The 8 weeks starts whenever your loan is funded. So what happens if you pay people back in arrears? It really should be you should really pay them from whenever your loan is funded through the 8 weeks. Because they've already received compensation for unemployment, anything before you receive your loan funds.
Okay, anything to add?
Well, or hire them back. I mean, a big press from the government is hire people back. Instead of unemployment, keep them hired.
Awesome. And it looks like the last question that's typed in for now says, if you lost money last year due to the tornado damage repairs and issues, and they look only at gross profit to calculate your 50% on the EIDL loan, then you won't get anything to help with this year, correct?
Boy, it's one disaster after another, but I think you would still want to make application. One thing about the disaster program is you're actually assigned a caseworker, and then you could tell them, hey, because of another disaster, this happened, and maybe they'll let you go back another year. I think you would still want to apply and work with the caseworker on that, because like I said, you have one disaster followed by another one. So I'm sure they'll come up with a solution to know what normalness used to be for you.
I agree.
Okay, and it looks like Lauren Carter added something too. She said, according to SBA, forgiveness will be reduced if full-time headcounts decrease or if salaries and wages decrease. Can you guys clarify on that?
That's kind of what I said earlier. I mean, the gist of it is we're collecting all this data for 2019 salaries to determine your loan amount. So we know what the average is on payments and heads. And we want that same payments and heads on a monthly average to be in that 8-week period.
Okay, looks like another question came in as well. Says, can you pay a bonus during the 8-week period to reward employees that kind of hung in there?
Commissions and bonuses are, let me check if bonuses are part of the payroll costs.
Well, in my thought on it, while Leslie showed, she has good knowledge and resource, and I just kind of make it up as we go. But I would expect as long as you're going to W-2 that, you're going to be okay. But you're limited to a proration of what would equate to $100,000 in annual salary. So if you paid somebody a $10,000 bonus 2 months in a row, so that's $20,000. Well, you do that over a 52-week year, that's more than 100,000. So that's not all going to be forgivable.
It doesn't specifically list bonuses here, but it does list salary, wages, commissions, tips, that type of thing. So as long as, if you do give them a bonus, like Jason says, as long as it's reasonable, that they would have gotten that on things too. And you may have to do some little bonus checks to get people back too, as long as it's reasonable.
Okay, and another question to clarify on, do you have to be with your current bank to apply, or can you apply with a new bank?
You can apply with any bank, credit union. You kind of saw in the news that everything failed, come Friday because half the banks couldn't get on the system. Well, those are banks that were never in the SBA program to begin with. So like credit unions could join into this plan. So they had to get approved by SBA and up and going. And all of those people, their final approval leg wasn't completed by that Friday when the program opened. So your normal banks who always do SBAs, most of all local banks here participate, and we were all able to get up on Friday morning at 3:00 a.m. Jason, how early were you up?
I got up before 9 that morning, which is really early for me.
We started at midnight, couldn't get in, but by 2:15 the system was up. So anyway, so if you do apply with, if you have already made application with someone, again, if that application is approved and you try to do another place, the system knows and says you can't do 2 places. If you belong to someone who doesn't, who can do these, but they may not be experienced, just go with one of your main banks. But you do not have to be Hawthorn's customer or Central Bank's customer to actually make application here.
Okay, and someone asked, they applied but haven't heard back yet. Are they able to get back to work May 1st and then start using the PPP? And are there any other programs or loans to apply for even if we get the PPP?
All right. Well, that, and we've hit on this several times. Basically, once we get you submitted to the SBA, we have 10 days to fund. There are some folks that may be trying to press that issue on not wanting their funds yet. You're going to have to talk to your individual banker and see if they'll allow you to make any changes. And I understand if they don't, but I understand if they're going to try to. In regards to other programs, certainly EATL is possible, but what they're looking for is, if you're coming here for the payroll, if you go to EATL, then it's not going to be for payroll related expenses. And then you're always able to work with your community banks to find other avenues. The other thing that you'll find is Congress knows this isn't it. They discussed the Main Street plan yesterday, which will be for larger industries. So that'll be the fourth tranche from the government. They're already talking about a fifth and a sixth. I wouldn't be surprised if we see this get to $6-7 trillion in total relief packages that they continue to roll out. So for things that there aren't yet today, they may be here tomorrow.
And that kind of rolls into this most recent question that was typed in. This person had called SBA yesterday to check on the status of the EIDL submitted last week. And she said it took 2 hours of wait time, and they said it might be 3 to 4 weeks before they get back to her.
In going into the program, but even I was working with people on the disaster programs, leading them to that before the PPP even came out. And they had hired an extra 400 people just for the disaster loan, but nationwide, that's not going to get them very far. As long as you apply online, and they did change the website, they should have the most recent website up. So they allocated a new website, which can handle a lot more. If you apply and you get a confirmation number, you're in the queue, and you do have to wait. That program, you can apply through the end of the calendar year. So it's going to be there. There's no rush for it. And it's going to be more hands-on because you're actually going to have a caseworker to work with. Let's look at another question.
Someone asked if overtime qualifies.
Oh, definitely.
Sure.
Okay.
But now we're getting into, I see a very specific one that I'll either let Leslie handle or I will move on. But, retirement contributions, if those will count in this, if you do it for the year, I don't know.
So on the self-employees, we are giving them the net income plus wages they played out in W-2, and we're kind of stopping there. If they now, if they can show that they can contribute to retirement plan just based off that Schedule C, that's fine. And then that's about it. Somebody else asked about depreciation and things like that. It doesn't matter. It's just the net income.
Correct.
I'm sorry, we just have not received any guidance. So every day the holding company SBA people talk, and that's what we're doing at our bank. It may not be exactly the same thing everyone else is doing, but we still have to come up with something because there is no guidance.
Okay. Well, Sean, do you have anything you wanted to add?
Yeah, sorry about that, guys and gals, with my computer. There's really nothing that I would like to add other than, well, first, thank you for Leslie and Jason for providing your time and expertise on this. This is a very trying time for some individuals and businesses. Continue, for those folks out there listening, to read these stories, stay updated, stay in connection with your local lender if you already applied or you're getting ready to apply, And as far as the Jefferson City Chamber is concerned, you know, we're all still working, obviously, home, but can still take phone calls. You might have to leave a message, but we'll get back to you. Please send us emails. Everybody's continuing to check their emails, so it's kind of business as usual. So if you have questions, just reach out to us or reach out to your local lenders. Again, thank you. I'd like to thank Leslie and Jason for their time and expertise this morning. So back to you, Kels.
Awesome. And I'm unmuting Susan. Susan, is there anything you want to say?
No, I just like to add a thank you. I think that we are all in this together and see our members strengthen our members and our resources. So thanks again to Jason and Leslie for providing this information. I know that you are super busy, and for you to take this time to share with us, we really appreciate it. And also Natalie Newville from the library, thanks for checking in with us, and encourage people to check out their website to get resources from them. And have a great day.
Hey, I got one more thing I'd like to share, if I could. And I know this, I'm sure this would come from Leslie absolutely as well. Thanks to the accountants in town who have stepped up and helped their clients get their payroll information together, give them guidance, and help them make good decisions when it comes to seeing their banker. So thanks.
Thank you for being patient through everything as everybody is learning from day to day.
Awesome. Okay, well, we're going to go ahead and close it down. Thank you guys so much for coming.
You're welcome.
Bye-bye.